I'd like to talk with you for a few minutes about how we manage portfolios at Security First Asset Management. As fee-based fiduciary planners, it's important that we have a defined investment selection process and also that we have a plan in place to mitigate downside risk for those clients that are our low and moderate risk portfolios. So first of all, let me describe to you what our investment selection process is. The first thing we do is we look at the macroeconomic environment that we're currently in. What is the economy like? How is the stock market valuation? There's key indicators that we always look at, and there's proprietary data that we have access to make sure that the fundamentals of the economy are strong, especially when we're trying to mitigate downside risk for our low and moderate risk portfolios. So once we determine the macroeconomic environment, we then determine the equity exposure we would have in our low, moderate growth and tax-sensitive portfolios. After determining the health of the overall economy, we then look at the sectors we want to overweight and underweight, and we do an annual rebalance in January. Certain sectors we may want to avoid having too much concentration in. For example, if the technology sector is overvalued, then we may not want to, for risk-averse clients, have a lot of exposure to technology because there's more risk the more overvalued something gets. There may be other sectors, for example, maybe energy or healthcare, consumer staples, they may be more attractive. So we want to buy value. After determining which sectors we want to over and underweight, we then look at what stocks and individual securities we want to include in the portfolio. Generally, our portfolio will consist of around 25 different positions. We want to have thorough asset class diversification and proper risk mitigation by holding some equities and some in our money market accounts or other instruments that may prevent loss. We look at which stocks have had and which companies have had earnings histories and have paid dividends 25 to 50 years. We want to see earnings increases 7 out of the last 12 years. Dividend increases 7 out of the last 12 years. We want them to be undervalued compared to their historic value, and we can do that by determining the dividend yield compared to its historic dividend yield for a specific company. We also look and see which companies are highly rated with S&P and other credit agencies. After determining the health of each company and individual stock we want to hold in the portfolio, we look at which asset class balance is most appropriate for the current conditions of the market and for your individual portfolio. Something you should know that we do at Security First Asset Management is we do something called block trading. The reason this is important, we can, for our low-risk clients, all of their accounts can be traded at the same time. Same for moderate, growth, and tax-sensitive. Most companies and advisors don't have block trading in place, and that means they have to individually go account by account and make trades. This could prove to be problematic if they typically trade larger account sizes first and then work their way down to lower value accounts. That's not fair in our opinion. So we make sure everyone, no matter the size of their account, gets the same purchase price and the same service and the same portfolio as a high net worth client would. This is only accomplished through block trading. We can trade all the accounts at the same time in and out of the market and give everyone in the portfolio the same pricing. So this is how we do portfolio management at Security First Asset Management. We want to make sure we have a plan in place for those of you in retirement that want to mitigate downside risk. Let's face it, market conditions can be very unpredictable. The economy can be crazy. There's a lot going on in the world. For most people, they want to have some type of plan in place to make sure that their portfolio doesn't drop too much unpredictably. If you'd like us to do a risk assessment of your portfolio, if you're concerned that maybe you don't have these types of plans in place with your current advisor or company, please give us a call or come see us. We'd love to sit down with you, and I'd be happy to take a look at what you're currently doing to make sure that it's right for you.